CNBC and other media outlets have reported that Volvo sales fell to an all-time low, crashing 14%. Why has this happened? I mean, Volvo sales this year, nearly 20% of their sales worldwide are electric. That's far better than any other legacy automaker. Hello, my friends. Welcome to the channel. I'm Sam Evans, and I think I might have an answer for why Volvo's sales or share price, why its stock price has gone down, and why I think it's actually a pretty good deal at the moment. Now, for one, Volvo is the only automaker hoping to go all electric by 2026. That's pretty soon. I don't think it's going to hit that goal, but it'll come close. It's aiming for that. Aim for the moon, get halfway there, you've done a pretty good job. And I think Volvo, as a result, will still be around. Now, to give some context here, there is a pretty good reason for why their share price came down. It looks like it's Volvo's parent company is not particularly confident in them. Its majority shareholder, who we all say that, Volvo is basically owned by Geely, which is a Chinese conglomerate, mega company in China. However, Geely just sold a bit more of its stock or its ownership in Volvo. Geely on Thursday launched a placing of 100 million Volvo car sales shares, which the deal's bookrunners said after the market close were sold at around 37 Swedish crowns each, or $350 million in total. The stock closed at 40.84. The sale of the 3.4% stake leaves Geely with a holding in Volvo cars of 78.7%. But it does also mean that Geely have sold 10% of their ownership this year. That's pretty significant. It appears as though they just continue to sell down for some reason. The placing will increase the free float and further broaden the shareholder base of Volvo cars, said Geely. Proceeds received by Geely Holding are intended to be used to support business development within the group. None of the cash from the share sale went to Volvo, though. This increase in our public float and improvement in trading liquidity benefits both new and existing investors. It allows a wider base of shareholders to invest in Volvo, said the Swedish company's CEO. Jim Rowan. Now, Jim Rowan is a great CEO. I've got a lot of respect for Jim Rowan. He doesn't have bipolar like Stellantis CEO. He's, I think, a really good leader, and I've got a lot of faith in his direction for the company. Geely, I don't have so much faith in Geely. They are investing enormously into internal combustion engine production in a massive joint venture with Renault for 11 different factories building internal combustion engines around the world. That to me is truly bizarre. But anyway, they're doing it. As of the end of closing, Volvo's stock price had fallen only 10.9%, so it rebounded at about 3%. It was initially down 14, then it's down by 10.9 at the end of the day. However, Goldman Sachs, BNP, and SEB were bookrunners for the transaction, said Geely. So in other words, they're the three companies who have purchased a fair bit of the stock. Geely Holding is committed to a lock-up period of 90 days for its remaining shareholding, subject to customary exceptions. So CEO Jim Rowan said he saw healthy demand for Volvo cars and widening profit margins for its battery electric vehicles this quarter against the third, as the group posted third quarter profits that fell behind estimates. Its profits they're coming down. The company's selling more EVs and its profits are falling as a result. So like everyone else, it doesn't make a profit on the EVs it sells. That's my interpretation. I think that's pretty clear. There's a bit of a perception as well outside of China that Volvo is a majority-owned Chinese company, and therefore there's more risk involved. Geely also plans on doing something else soon. It's planning on listing the electric vehicle arm of sports car brand Lotus through a SPAC deal later this year. It's filed for an IPO as well in the United States of Zeekr. Both deals are fraught with geopolitical risks, says FT.com, because of US-Chinese relations as well as increased investor skepticism over the viability, at least financially, of EV startups. Geely, which acquired Volvo from Ford in 2010, on Friday morning said its commitment to the carmaker remains steadfast, and it claims it's simply enhancing the value of the stock. But it's worth pointing out, as a warning if you are considering investing in Volvo, which could be worth a look, that Geely plan on selling more of its Volvo position very soon. It said it would release further shares of Volvo, which was in line with its long-term strategy. It said the move is designed to increase liquidity of Volvo and offer more opportunities to generate sustainable long-term value for institutional and retail investors. So the question here is Volvo Group, is it a good buy? I mean, do they sell many cars? Volvo's sales worldwide in the year 2021 were around 685,000. In 2022, it sold 615,000. This year, though, it's on track to possibly sell around 700,000 vehicles, with around 20% of those being fully electric. Its EV sector is growing quickly. Its plug-in hybrid sector is not growing. I think that's a good thing. But can it make a profit on EVs? No one really knows yet. But I'm interested to know what you guys think. Do you think Geely's a good buy right now? Its price to earnings ratio is reasonable at 10.1. Its stock price is, it's certainly, I believe, a fair price. But the question is, can Volvo succeed in the future? There is a lot of Chinese automakers and they want to do exactly what Volvo is doing today. Let me know your thoughts in the comments. Bye-bye.